My name is Thomas, and you're watching FPS Analytics and Education. Technical analysis can be a little bit of a challenge for newbies, so how can you help yourself? Well, in this video, I'll share 5 tips that will make Forex chart analysis a little bit easier for you. And number 1, focus on trends. So, trend following trading has multiple advantages over other trading styles. For starters, if you follow a trend, you can remain in a winning position longer than if you try to catch a smaller price move. And this way, you can make fewer trades and save on transaction costs. And finally, trend trading saves time. On average, traders need 1 to 2 hours to monitor the charts and check trading portfolios when they trade a trend. And so to sum up, the trend is your friend, and you probably don't want to go against your friends. So make sure you draw trend lines through the distinctive highs and lows of the price chart. And once the current price approaches the trend line, just be ready for the price's pause or reversal. Alright, number 2, learn how to read Japanese candlesticks. So, Japanese candlestick chart is a type of chart where each candlestick represents a particular period, day, hour, minute, depending on the time frame. A candlestick can also tell you the open and close, the highs and the low prices of a period. In addition, the mere shape of a candlestick can tell you the story about what happened in the market. So for example, a series of candlesticks of average size in one direction means that there's a strong trend in the market. In addition, if you look for pin bar candlesticks, they have long upper or lower wick and resemble pins. Those kind of candlesticks are easy to notice and are usually a reliable sign of market reversal. And number 3, the longer it ranges, the bigger the breakout. As we all know, the market is constantly changing. It moves from a range market condition to a trending market, and then back to a range market. If support and resistance levels are clear, there will be a breakout at some point. And as practice shows, the calmer the price goes, the narrower the tunnel of the pattern, the harder it will break. Alright, so let's take a look at the BTC USD chart. We can see that after every moment of consolidation, Bitcoin fell significantly, more than 25% every time. And number 4, use understandable indicators. So, many traders, they have their favorite technical indicators, and these indicators, they become a part of the standard strategy for these traders. However, no matter what you hear, there really is no single best indicator for anyone. And that's because every trader's style, personality, and psychology is different. Thus, the technical indicators that each trader uses really should be different. So, our advice for you, don't use complicated instruments. Just because they're advanced, it doesn't necessarily mean they'll open a holy grail of success to you. In our view, the best indicators for beginners are moving average, RSI, and momentum. And number 5, check bigger time frames. So, you'll need more information for the analysis, so you'll need more than a 30-minute or 1-hour charts. Spend a little bit more time analyzing daily, weekly time frames. Start drawing trend lines, mark support and resistance, and look for candlestick patterns, and use technical indicators. You'll probably find levels and setups that will define the price's behavior on smaller time frames. And that's it. These are 5 tips for Forex chart analysis. Do you have any other recommendations based on your experience? If so, please share in the comments. Thank you for watching. Subscribe to the channel for more trading tips.